Hey traders, Raghee here. Welcome to Charts and Coffee. Happy Thursday, everybody. Great to see you all. All right, so my coffee's brewing right now, so I'm coffeeless for Charts and Coffee. But don't worry, it's my second cup coming up. And for those of you in the futures room, don't worry, I'll be well caffeinated for our open. Looking forward to some day trades today. If you checked out the free video at the Simpler Trading YouTube channel yesterday for Wednesday, I made some notes about why I felt yesterday's move was an important one. And I also discussed in the closing session in the futures room why the low volume that we saw, and I'm actually bringing up another view for you all to check out, why the low volume was a little bit concerning. So especially, let me show you where it was so important, why yesterday's candle was so important, especially on one of the broader averages that was hit so very, very hard by the volatility of Monday's sell-off. On Tuesday, we gave it a good old college try, but we couldn't quite get above that key level of sort of the scene of the sell-off high, right? This is Monday right here. That's Tuesday. Wednesday, we were finally able to trade through that. So I actually do anticipate this could be just sort of a minor high or a stall candle. I'm not assuming that we're going to continue higher. But again, thinking about the path of least resistance, it's interesting that, again, yesterday, the market was able to take out, the indices specifically, were able to take out those key levels. The NASDAQ, for me, the recovery in the NASDAQ wasn't as big a deal, because the NAS really did not have a massive sell-off on Tuesday. The NAS actually looked the best in terms of sell-off. It was the most structured. It was the most, went to a very predictable level, which is sinking right down here into the wave, nailed the 21 exponential in this area, and now it's moving higher. The NAS is very important, gang, just as I kind of leave you with these thoughts to kick off the morning. The NAS is really important, because tech is heavily weighted, of course, in the NASDAQ, but the S&P and the Dow as well. For those of you in the futures room in the sector secrets, I did a deep dive on the reality of high concentration weighting and what that means for understanding why the indices move the way they move. So again, good morning. Good morning. Great to have you here. Let's jump into the questions. James, good morning. Looking at ZL. Is this a pullback from a 1, 2, 3? If so, can I enter at the bottom of the wave? Where would I place my stop? All right, so let's jump into bean oil. All right, so James, I will say this: when we had the FOMC meeting, that was at June 16, the reflation trade and the sectors within the Dow that disproportionately benefited from the reflation trade. So what's reflation? It's inflation. Inflation of goods and services, commodities being part of that group. So no, I wouldn't get too probably ahead of myself here. Let's go to the daily. That would actually help a lot, wouldn't it? So how would I perceive this movement on ZL? This would be a potential continuation. I don't love it. But if we are looking at this for that type of move, again, we definitely have the bullish bias. We have the right environment for the 1, 2, 3. 1, thank you, Darvis. 2, thank you, Darvis again. I could even call that a 2 until this came along. This is tough because this would have been a break of this 2. If I count this 1, 2, 3 here, which is sort of a larger pattern happening, that broke right in there. So I don't know. We'll probably see this market chop higher. I can't say that I love it, James. And it's not because of a sloppy continuation Dow 1, 2, 3 pattern at all. It's because the reflation trade is, for now broken, except for in energies. And energy was rocked by OPEC. So your stop is going to be below the 1 point. That's always classic Dow 1, 2, 3 pattern plays. And if you haven't already, and I know you know this, James, hang on one sec. Here we go. If you haven't already checked out countdowntrader.com. Oh, where the heck is, there we go. Be nice if we could type in the URL of my own site. Trish has put some great, I think one, two, three articles here. And by the way, when you guys leave questions and you send questions to us, whether that's here in Charts and Coffee or any of the rooms, Trish and Lorna, I'm going to give Lorna props too, but Trish is always monitoring, what the questions are. She's studying everything you guys are asking, getting the emails from you all and say, hey, Rog, here's where there's a lot of question or confusion or interest. And that's what structures the Countdown Traders, coming from you guys. So thank you for all the input. Thank you for being inquisitive and wanting to educate yourselves. I mean, this is where the content comes from. It's not us just pulling things out of the ether going, wow, this might be fun. No, she's actually looking very carefully at, what you guys are interested in, what would be most applicable to the market right now. And this is the benefit of having someone who, has been studying my trading for the better part of, oh my gosh, I guess it's been 8 years plus at this point. So definitely check out the Countdown Trader for the 1, 2, 3 conversation. I think it's probably pushed out to page 6 or 7 at this point, but do check it out. I think you'll find it super, super helpful. All right, so back to the questions. Thank you so much. Alex says I was going to ask about ZL as well. Yeah, no, I love it, Alex. When you guys are all looking at the same kind of things, which is what's so important about within the mastery, all of us looking at things in a way that is process driven, and therefore, we kind of become the many eyes together, attacking the markets, if you will, managing the markets. I don't love it mainly because I don't love the narrative behind it, and I can't say this is a really clean 1, 2, 3. But thank you for the question, George. Good morning. What do you think about, or what do I think of buying puts of QQQ? Well, George, let's start with the NAS. And if you've been watching Charts and Coffee for any length of time, you know exactly what I'm going to say. Double green, baby. Right? Double green, baby. Double green. I cannot fight as a trend trader's mindset, a trend trader's belief in the path of least resistance is going to be higher when the 8 is over the 13, the 13 is over the 21, and the 21 is over the 34 EMA. We break that down in a very specific way in the JT multi, but that is what it's measuring. It's 4 exponential moving averages communicating the structure of the market. But that's just one thing we use to confirm the structure. The other thing is the grab candles themselves, right? So grab, of course, is related to wave, but that's the other thing too. So I'm frankly not even allowed to short the NQ. I'm not even allowed. And so with that in mind, could this market start preparing for puts? Well, let me show you what it has to look like. Rather than telling you no, which is my answer, let me show you what it needs to look like, or maybe somewhere else you could look for weakness in this market, because that's kind of the question, right? Where could we see weakness in this market? The best place to look, let me show you something here. Take a look at the Dow. I mean, does it matter that it's the Dow index versus the NASDAQ or the S&P? What we want to, what is dinging at me here? Hang on one sec here. All right. So see this here? That is a neutral sideways trend courtesy of the JT multi. It's a very important part of our analysis, right? I also have a mix of red, blue, green grab candles. All these are indicating what? This market is not in an uptrend. So unlike the S&P and the NASDAQ, which I would largely consider is in an uptrend, this is not. Okay, so then what's the next thing we can do? Notice everything is automated. The next thing we can do is say, well, where is the resistance? Thank you, Darvis. And where is the support? Again, muchas, okay? Muchas gracias, Darvis. There we go. Support, resistance. So in this range, we now have distribution. So for those of you that are not aware of the different market trend names, this is distribution. All right. So if we're stuck in this range and you use something like a slow stochastic or ready aim fire, if you're using a tool like that, then you're just looking for this market to oscillate. Oscillation is the conversation you have in chop. There's no oscillation conversation in a trend, right? So I'm not talking about a market oscillating in the double green uptrend of the NASDAQ or the S&P, but in chop, now you're talking. So if there's a place to look for selling pressure and where I would buy puts, it's right up in here. Okay. Now let's flip this around on its head. Now, this is something that I sent out as an on the radar conversation for the Sector Secrets folks. It works the other way too. I would rather be long the indices. And that's why, take a look, same conversation, right? Look down here, yellow, distribution. Let's look at through different terminology. Oversold, overbought, AKA support, resistance. What do you think just happened? Right? So what I teach in the room, and some folks, how many of you in the room took this IWM trade? I know a couple folks did. Catherine comes to mind. I don't know if you're in the room here, Catherine. I remember you said you were scaling out of that right in here. So when we have a range from high to low, one of the things that we do is we take profit at the midway point of the range. A lot of people feel, well, it just ping pongs, and that it does not do as consistently as we need to really make this a target. This would actually be T2. We actually hit T1 on this kind of fade yesterday. Same conversation as the Dow. So if you are looking at sort of counter trend moves, my advice is don't, but find where the markets are in distribution and give you a much higher probability of finding fades. Meaning, can I buy puts into strength? I'm looking at the Dow, right? So if someone says, Rog, gosh, you're so bullish, but where am I bullish? NASDAQ, S&P, XLC, XLV. Those are two long positions in the mastery. Where am I thinking about if there's going to be a rollover into whatever month for whatever reason? I don't know what the catalyst is going to be. Nobody does, right? These things are not necessarily projected. But if we're going to see weakness, and where do I want to capitalize on it? Here in the Dow. And you can trade this via DIA, right? You can fade DIA. You can fade XLI. You can fade maybe even IYT. Okay, IYT's, and take a look here. If you want to short a corner of the market right now, I would prefer, think about it this way. And I know, I hope this is making sense, because it will make watch list building and trading so much more effective. Don't right now think at the NASDAQ or the QQQ or the SPY or the ES level. Don't maybe think index at the moment. Get a little bit more specific. Move into the sector thinking. Think at a sector level and ask, what's weak? You want to short something? Short IYT, right? That's what I'm talking about. And notice how everything is in alignment with the JT multi, with the grab. This is what allows traders to learn my process so quickly, because I've automated the things that have been rattling around in this crazy head for 35 years. So the idea is, by automating the tools, you're seeing the markets exactly like I am. When Lauren and I were working on indicators before my last class, before the playbook class, we make cool stuff that we want to use. Some of you, look at the tools and go, Rog, why do we have this tool? Because I wanted it. Like, I wanted to have an at-a-glance recognition of an inside day. I want an at-a-glance recognition of a minor low. I want an at-a-glance recognition of the market structure and the Darvis formation and the Darvis patterns. I wanted all that automated for me, right? So I make cool things that I want to use, and those are ultimately the indicators that I share with you all. So I know it's a huge answer, but that's the way I would tell you, George. I'm not even allowed to short the NASDAQ. In fact, it's still the one that I'm most bullish in, because that's what my indicators say. And at some point, could that shift? Yes. And we know the colors will change. So just look for the colors to change. Let these things be your traffic light, right? Let these things, and it will, I think at some point set up a neutral environment like the Dow has, or maybe there's a sector within the NASDAQ. I know I'm going on and on, but this is a question I've been getting a lot of. Maybe there's a sector, XLK, XLC, XLY, that's going into a yellow, neutral, overbought, oversold distribution market before the broader average rise. Maybe there's a stock, right? Individual heavily weighted stock within the NAS that might be preferable to just shorting the broader index. So that's the way I'll look at it. I'm not ruling out the possibility at all. We're long bonds. So I'm not, ruling out that possibility at all. I just, I know that a lot of my positions are clearly very bullish, but that's just what my tools are saying. So I'm very much adhering to the very things that I teach you guys. And that's the only way that I can share what I'm doing with transparency. I hope that makes sense. MATX, say there, Mark. It's a neutral market. It's probably more a market that's setting up for possibly a breakout. But Matson, think about what Matson is in terms of the sector and the overall tide, if you will, of this individual boat. It's right up on top of earnings, so that's not a window for me. Maybe after earnings, we'll see. But if I get a test of the 200 EMA and these lower Darvis levels, that could be interesting, Mark. Next up, what do I think about continuation in Square? All right. So continuation is going to be higher probability if this were, you guessed it. But what is the trend that has preceded? Right, we have had double green, but is this a trend? Not typically to me, although take a look at the different times that we have gotten close or even through the 200 exponential. It could be interesting, but I can't prioritize this particular stock because the structure is, Kimberly, the structure is just kind of meh, right? It's not shortable. I mean, I would definitely think about a long position here, but where would I be buying dips in Square? In this environment, right? Dips like this and this and this. And then, by the way, that dip ended up getting something I got stopped out of. So we had 3 different dip opportunities. We went 3 for 4 inside that specific environment. Do you see how high the win rate was and the follow through was so good in the right double green environment? And then after that, it's, give me a Dramamine, right? It's making me a little seasick. So wait for the right environment for the stock or find stocks that are trading in that good double green environment. Hey there, WR. Why would gold go up this morning after the increase in unemployment claims? So remember, gold, my friend, is not this, when people say gold, I don't know who says it anymore. They really should know better. But if anybody says gold is a safe haven, they just don't have a fundamental understanding of what gold is. Yes, gold can sometimes move in a high inverse correlation to the dollar or negative correlation. But remember, correlations come and go. I think that correlation to the dollar was in the high 80s or high 90s, and I think it's dropped into the low 70s. Those correlations, when you measure them, they do ebb and flow. Gold historically and more broadly and more predictably is an inverse relationship to real yields. Some of you have probably heard me talk about this before. This is macro 101, right? The things that pass for macro nowadays is kind of hilarious. That's okay. It's kind of a buzzword, but let's talk about the true macroeconomic rate of change understanding of growth, inflation, monetary policy, and money supply. Those are the 4 main pillars of macro at a very foundational level. When the nominal yield of a bond minus the rate of inflation, right? So when the nominal yield of a bond and the rate of inflation, that's your real yield, drops, it opens the door for gold to move higher. So I don't think gold is moving a lot yet. And all my cards on the table, I am long gold. We're long GLD right now, looking for a move just to the other side of the range, and then we'll see how much higher is high. But look at real yields. That's what's going to help you decode gold the most consistently. All right. Thank you for the question, WR. All right, gang. So thank you for all the questions. Thanks for being here for Charts and Coffee. You can join me in the futures room with a $7 trial. You can come check out our mastery. We just did our live trading session yesterday. Every Wednesday we get together in the mastery where I'm on the mic taking questions because I do have a lot of indicators. I have a lot of indicators, but most of them, are free actually to members, and there's a couple premium. So we do tech questions, Q&A, review of current positions on a weekly basis. So definitely come join us there, or in the futures room where I'm heading over to right now. So as always, have a great one, everyone. And we'll see you tomorrow. Be sure to check out the free videos that we make available on the Simple Trading YouTube channel, the Options Room, the Fib Queen, and also my videos for the Futures Room. And I'll see you tomorrow, same time, same station. Be good to each other.